Everybody's heard about Santa Claus Rally, but the problem is most people trade it as if it's a rumor instead of a measurable market edge based on data. In this video, I'm going to use TradeWave to find exact Santa Claus Rally date ranges that has performed the best, and that's not the only pattern. There are so many patterns in the market that are unnamed, and you can find them with TradeWave, and we're going to take a look at some of that too. Okay, let's go to the TradeWave interface, and if you don't watch the rest of the video, just watch this part. I'm just going to bring up the absolute best date range that I've found for Santa Claus Rally, and here it is. December 20th until January 7th. Well, this year, December 20th in 2025 is a Saturday, and in the TradeWave world, that means the next trading day, which is 22nd, Monday the 22nd, is the valid start date for the Santa Claus Rally based on what we're looking at right now. So look at this. I already have filtered it by PE plus 1. That means I'm only looking at the years after a presidential election. That's why you see that the years are 4 years apart. And every one of these is the year after a presidential election. And as you can see, 88% of the years was profitable. You can go look at the stats page. It was 21 out of 24 years was profitable. Also in 1977, the market went up 3.43% before dropping and losing 2% during this date range. So I'm going to call this a winner also, because I could have been in and out of this one. Well, if we count that, then 92% of the years are profitable. But how about every year? How about if we just don't want to look at presidential election years? Okay, let's go, and we have 97 years of data starting from 1928. Looking at that, you can see that 79 of 97 years was a winner, 81% of the years. However, if you look at some of the years that were losers, same thing applies. You also like 2007 went up 2.65% before closing down 3%. There are a few of them. So it's actually even better than 81% for overall, but I'm going to switch back to PE plus 1. In my book, The 100-Year Pattern, I show how presidential election cycle correlates to the market signature from one year to the next. It's absolutely fascinating how this presidential election cycle has affected the market in the last 100 years. Well, we only have 100 years of data to analyze, so it has done it since we had data. I'm going to switch back to trend chart so we can actually look what's going to happen next year. So this is a Santa Claus Rally video. I don't want to be a downer, but next year does not look good. It's bleak. And by the way, I have been bullish on the markets since 2023. January 2023, I set up a video and I said market's going to go up. I've done that for 2024, 2025. Actually, in 2025, I had a video this year, on April 7th, and I said the market's going to go up tomorrow. Actually, it was April 6th. I said the market's going to go up tomorrow, and I was wrong by 24 hours. And the market just skyrocketed. And 2026 is the first year in the last 4 years, that I'm actually bearish. Why am I bearish? Look at this. After the Santa Claus Rally ends, this is, by the way, the trend chart. Trend chart is the overall average trend of all of the years we are analyzing. And as soon as the new year happens, this is the midterm election year, the PE plus 2 year. And look at it, it's going to be volatile. Not only that, we peak here around mid-April, and then it's just going to go down, drop sharply. That doesn't look good for the market. Everything's going to be bleak until this magic date of September 27th of the midterm election year. The market is going to tear up after that. So this does not look good. What's going to happen to stocks? Well, my favorite stock, NVIDIA, has an extremely vulnerable time between first day of spring, March 21st, until July 30th of 2026. In the last 6 midterm election years, it's gone down sharply. 66.89% in 2002, 12 and 19 here, so over 30%, almost 50% in 2010, a lot less in 2014, and 2018, 13% and 1.72%. So the pink part shows you the extent of the move, but the red part shows you when it, at what level it closed. In 2022, 31 and 16, it dropped 47%. It recovered, but it dropped 47%. They were an GPU AI company then, but they still dropped sharply during this time. So chances are there that this is going to repeat. And if you take the fundamentals into account, the tariffs have reduced the overall economic output, but the biggest problem with the tariffs is that they reduce the money velocity. The overall trade around the world has reduced. Stocks are at all-time valuation, extremely high. AI and the fabulous 7 stocks are literally driving the market right now. So if you actually put all of those things together, and AI companies, which NVIDIA is the leader of all of them, starts a downfall, it's going to pull the entire market and probably the world market with it. So my suggestion to you is 2 choices. Number 1, absolutely the best choice, is to subscribe to TradeWave. We're going to navigate this next year. When you know and you can time a bear market and a downward movement, you can make obscene amount of money if your timing is right. Bull markets usually move up slower. They are much longer. About more than 2/3 of the time is a bull market, but in a bear market and a down move, things move fast. If you can time it, you can make obscene amount of money. We're going to be navigating that with TradeWave. Option 2 is just be conservative. Either be careful trading, don't trade a lot of money, or go into gold or bonds. Probably gold is better until the magic date of September 27th. What happens September 27th? I actually wrote a book, The 100-Year Pattern. 100-Year Pattern is named after a pattern that I discovered that has never been documented before until I put out that book. And that pattern starts on September 27th of midterm election years. I've already saved it. I'm going to bring it up, and that's how we're going to end this, because this is a Santa Claus Rally video. We don't want to be too bleak. Here's the good news. This pattern has held up since 1930. 1930 it failed. It's been up every single midterm election year, starting on September 27th, ending on July 18th of the following year. It's never gone down since 1930. Nearly 100 years. I even calculated that around 68% of the overall cumulative return of S&P 500 in the last 100 years was during this pattern. So that's where I'm going to end it. Subscribe to our channel. I'm going to put a lot more videos and try to navigate this 2026 really with precision. Let's put it that way. Have a great holidays and hope to see you again soon.